Ellen Hazen has some big ideas for you. Into all of it, she is Chief Market Strategist and Portfolio Manager at FL Putnam Investment Management down from Boston and joins us now. Ellen, good to have you on set again.
Thanks for having me.
Yeah, before we get to some individual things that you like, why do you think the market is not responding more to day 9 of a partial government shutdown?
I think there have been a lot of shutdowns over the years. We've had 20 shutdowns since 1970. Most of them were only a few days. The longest one was the last time, 35 days. And even with that one, you had markets down and then back up for a net change of just down a couple percent. So I think that the market, Brian, is looking at history and saying, you know what, this isn't going to last. There are incentives on both sides to try to resolve things. We think that will happen sooner or later. But think about it, right? Markets are looking out 5, 10, 20 years in the future for their discounted cash flows.
Yeah. It's hard to say because there are a lot of people and families impacted by the shutdown, paychecks. Hopefully they will get back pay. The president kind of alluded maybe they won't. That aside, looking at earnings, we're starting to get some earnings. Pepsi, Delta Airlines, and others. What are you going to be most focused on beginning really next week?
A couple things. First of all, next week is when the banks start because the banks are always the first to report. So they're looking pretty good. On the investment banking side, you have investment banking picking up. And you also have the steeper yield curve with the rate cut that we saw last month. And so with credit still being very strong, especially for everything other than the very lowest cohort of income, I think credit costs are not going to be a problem and net interest margins should be pretty strong. So we're looking at that with banks. The other thing, Brian, that we're really focused on is going to be commentary around tariffs and pricing. I think a lot of companies have not increased prices in response to tariffs. They've paused. They either haven't got it through their inventory yet, or they're looking around at their competitors to see what their competitors are going to do. And so we haven't really seen that show up in inflation. Yeah. If that's going to happen, and I don't know if it will happen, but if it's going to happen, I think we'll start to hear about it this quarter. So that's the other thing I'm going to be listening for on conference calls.
Why do you like Morgan Stanley as an investment?
It's a fabulous franchise, right? You have the investment banking side, which is doing phenomenally well, especially with the lighter regulatory touch that we're seeing under the current administration. And you have the wealth management business, which is more than half of earnings these days, very sensitive to the markets, excellent execution, and it's a very reasonable multiple. So I think that's a stock you can buy and put away for a long time.
You know, we just talked about the semiconductors. Obviously, NVIDIA, we're contractually obligated to talk about NVIDIA every day. That's a joke, folks. It's not true. But you say there might be some others, the Lam Researches, the Broadcoms of the world, that don't get as much attention that may be worth investor attention.
Absolutely. So a company like Broadcom, I think, has gotten more attention recently than it did up until this year. It was sort of less known, I would say, than NVIDIA. But as you're moving from training to inference with a lot of these models, Broadcom is much more competitive in inference. And so as more of the data center money is being spent to build out inference, that is really going to help. Similarly with Lam Research, I know that you and your guests earlier were talking about TSMC. Lam sells into those semiconductor companies. They sell the etch and deposition equipment that allows them to make the chips. And so if you have TSMC, who had fabulous numbers this morning, doing well, they're going to buy more equipment, and that's going to help Lam.
Because they need to buy the Lam stuff to make the stuff that they make for NVIDIA.
Exactly right. Yeah. Just like they have to buy Lam, they have to buy from ASML. There's a whole lot of them, but Lam is one of our favorites.
All right. We have a guest coming on later on who actually helped sell Calpine to Constellation Energy, $26 billion deal. Doug Kimmelman, he'll be up in a few minutes. But talk to us about Constellation. We know the bull case, power costs going up, the stuff that's not contracted, they could sell out. Any other reason you might like a CEG?
I think it's the premier name in the space. You have a huge nuclear exposure, and you also have gas exposure when the Calpine deal closes. And their footprint really overlaps with a lot of the data center demand from a geographic perspective. And so they're going to benefit from the capacity. Their capacity is almost doubling with this deal. And they're going to get pricing. And in addition to that, you have this very long runway of demand going forward. And yeah, it's 21 times earnings, not cheap. But that's not outrageous for something that's going to be growing strong double digits.